This is Troy and Devin and Scott. We're here with the market conversation. The idea behind these conversations is to do this every 2 to 3 weeks over the next few months here as we get into the busy fall season in agronomy. Lots of decisions to be made and also lots of volatility in our respective worlds of grain, fertilizer, and fuel. So, Scott, I'm just going to kick this off with you because it's the question that's burning in my mind. Tell me what natural gas is going to do.
Oh, hi, my name is Scott Barkley. I'm the Vice President of Energy Operations. And Troy's asking me what natural gas prices are going to do. And my answer, as always, is I don't know what natural gas prices are going to do. However, we can look at some of the things that are going on in the market and infer what we expect might happen over the next few months and over the next year or so. Natural gas is pretty closely tied to oil production and oil demand, crude oil that is. And we've seen a lot here recently. The fundamentals in the oil market are helping drive additional oil production and natural gas production. Of course, Eastern Europe and the situation over there is the biggest factor, right? Natural gas is being significantly impacted by the changes of supply to Europe. Natural gas exports from the United States are driving price here domestically. So, with all that said, I can't predict what natural gas is going to do, but I don't think that there's a whole lot of reason to think that natural gas is going to lose strength here soon. Sure. We've got more things to indicate that natural gas would be strong moving forward.
And kind of following up with what Scott said, this is Devin Schierling, Vice President of Sales for MKC, and following up with where Scott came from, these geopolitical issues and things that are out there are just greatly impacting where the marketplace is today. We're in an industry right now where on Monday afternoons we're waiting for a crop condition report, and we saw no change in corn this past week, and the market reacted. And then the next day we saw a tweet with Taiwan, and the next thing you know we were off to the races, lower 25 cents a bushel. So I think that the volatility in today's market is just continuing to be at an all-time record pace, whether it's natural gas, whether it's fertilizer, and the key thing is to focus on those things that we can control. Troy, what are you seeing from a fertilizer standpoint right now?
Yeah, good question. Thanks, Devin. Troy Walker, Director of Crop Nutrients for MKC and Mid-West Fertilizer. Crop nutrients, and then the reason I started by asking Scott is it feels like in crop nutrients, particularly nitrogen recently, we're just getting swung around up and down based on mostly headlines. And the biggest headline at the current moment is European natural gas. European natural gas is 3 times what it was before the invasion of Ukraine, subsequently causing cost of production of European fertilizer to be at all-time highs, so high that many of the European producers have shut down. 10 production plants were shut down last month, is my understanding. The fertilizer's got to come from somewhere. So if it's not produced domestically in Europe, then they're going to look to import it from the U.S. and or more likely from places that we typically import our fertilizer from. So there's just more competition in the marketplace. So
our impact on shipping lanes is going to be really interesting as we go forward. As we talk about the port of Odessa in Ukraine and how we had one very small vessel of corn leave, and the market was under the impression that the gates were open again, and that's not necessarily the case. And so how that impacts our export values of grain here in the short term is a deal, but almost as we look more into that 23 marketplace, that seems to be an even bigger impact when we look at cost of production. Because, Scott talking about natural gas, its direct impact from fertilizer really boils down to those key fundamental facts that we talk about, which is knowing your cost of production, having a plan, and executing that when it comes up from that angle. So, Troy, as we look out in the future, one of the biggest hang-ups that we've seen is being able to execute our plan and to be able to have values out in the future. When are we going to be able to do that from a Q4 standpoint, and what does that look like?
Yep, great. We're just now starting to put out some future prices You talked about you're really looking at the 23 crop at this period. All input decisions at this point are based or are driving the profitability of that 23 crop. We're just now starting to see some Q4 values, still limited in where I can get those or who I can get those Q4 values from. But we have Q4 out right now, I believe, for all of our forms or major forms of nitrogen. There's some movement that's going to happen. NH3 is probably pretty steady for the moment, but as traditional, as we get into the season and demand starts to pick up and we really start to put product on the ground, we would anticipate prices moving up. So I think it's good that we're finally able to get those prices out, because then you're able to look at a more complete crop budget, or at least an early budget to establish some profitability in different rotations.
Troy, this is Scott again. What do you see driving volatility here in the next 6 months? Is it more of a fundamental question, meaning supply and demand, or is it a technical issue that's driving price volatility? Technicals in the markets are simply just historical highs and lows, historical averages. Sometimes we'll push markets up and down based on how traders are feeling that day, for lack of a better term. Do you think that price volatility here over the next 6 months will be driven by fundamentals or by technicals?
It's a good question. I've been telling people for the last few months, I think we departed from fundamentals a while ago. Sometime in late winter to mid-spring, it seemed like fundamentals kind of left the fertilizer market for whatever reason. We just kind of went on our own direction. Now maybe we'll come back together. We will, I think. I think the next 3 to 4 weeks is a little bit different time, because again, there's not a lot of demand anywhere in the country in that period. But once combines start to roll, fertilizer buggies and spreaders start to roll, things stabilize a little bit, and then we should get back to more fundamentals. On those fundamentals, I know last year one of the key drivers was concern about supply and availability of fall fertilizer. Consequently, as an industry, one of the largest fall fertilizer runs on record. That would be great to see, good fall fertilizer this year again. Obviously, weather plays into that, but the conversation around product availability is not a concern that I have, at least for our domestic market, our local market. We're very well situated between the Port of Inola, several manufacturing plants within a few hours of us, so we can almost always get product somewhere, and maybe what we pay for that product.
Yeah, so then when we talk about that availability not being the headwind that it was this past year, then it really allows the farmers then and our customers to be able to focus on locking in incremental sales based off of their opinion of the market, versus having to be so concerned of making that one decision to lock in my product availability. So that's a good change and gives our producers more flexibility, more options for this upcoming year.
And it's absolutely what I would encourage. I'm sure that's what you encourage, and I think it's more common with your grain guys to do it in bits and pieces. I feel like historically fertilizer, maybe for one reason or the other, or just because it's the way it's always been, people want to do it all in one swing. Boy, that's a risky way to do it. So if you can do it in bits and pieces, and certainly we're not holding anybody back from doing it little pieces at a time as the market moves. But I would definitely, we talk about it all the time, if you're buying fertilizer, I'd match it up with some grain sales.
And so as we get ready to wrap up our conversation here today, one thing I think we probably all should kind of give a quick update is, what are one or two things that we should be watching for as we move forward here in the next 3 to 4 weeks that could be impact drivers for us. And from the grain perspective, I'll start. Right now, you have a difference between what people's view of what our growing crops are and what the weather models are saying. And what that looks like is going to be a major driver for how we move, whether it's corn and soybeans, primarily corn here up front. The models are that 177 to 178 range. People looking out their back window are going to say there's no possible way. We're probably 174 to 175. That difference is really what's going to impact our market. And so you see the cash market reflecting one thing, meaning the pipeline's empty, we want it. But then once we get into harvest, how that impacts us will be really focused. So I think one key thing to watch is as we get our early corn harvest, watch what those local values are and how our local feedlots, ethanol plants are filling that domestic need.
Yeah, and I'll touch on that from an energy standpoint. I would say the two things that I'm really paying attention to here in the short term is the diesel inventory domestically. We're 25% below 5-year average diesel inventories in the United States. That's a reflection on reduced production during COVID times and demand not reducing as much as what had potentially been projected there. So we have some low diesel stocks, even though the price has been going down. And what Troy mentioned earlier, we're a little bit disconnected from fundamentals. Fundamentally, the price of diesel is going opposite of what the inventory is telling us it should be doing. So if there is some significant weather, specifically in the Gulf during hurricane season, we'll be paying attention to that very closely, and there's a significant impact to supply of diesel in those situations.
Yeah, and to close it, on the fertilizer side, I'm largely going to watch what Devin and Scott are saying. It's always important for the grain markets to stay strong in order for fertilizer to keep its stability and keep its momentum. And for whatever reason, grain, whether it's a report or crop conditions, were to weaken, that'll give fertilizer a little bit of a pause. The other two things we're going to look at, wild cards, I would say. One, anything coming out of Europe, particularly as it's related to natural gas and cost of production. If they're able to produce more over there or produce more in Europe cheaper, then that makes more available for the U.S. market and less that's going to get exported from the U.S. into the European market. And then the third wild card, which we really talked about today, would be China. Again, it's a wild card. You never know what those guys are going to do, but they are the largest global producer of phosphate and the largest global producer of urea. Their supplies are getting longer because they're not in a high demand period either. If they were to decide to re-enter the market, which it's not expected that they will, but if they were, that would be a big shift for the global market because it would introduce a lot more product to the market. So we'll keep an eye out on that. But hopefully you've enjoyed today's conversation or found some value in this conversation. Our reason for doing this is just to give you a quick snippet of what we look at every single day and how these three different areas of fuel, grain, and fertilizer interact and react to one another. If you have any further questions, certainly feel free to reach out to your local MKC advisor on grain, fuel, or agronomy, and they'll be happy to answer more questions for you and get back in touch with us with any other additional specific questions that you might have. But we'll look forward to doing this again in the next couple of weeks as the market continues to evolve and we continue to approach the harvest season.